The world is once again standing at the edge of a new kind of financial and geopolitical confrontation. And before we begin, let's be clear. What follows is a speculative scenario based on current trade tensions and expert commentary. It is not confirmed policy, not a government announcement, but a what-if exploration of how the next stage of the US-China trade war could unfold. Now, imagine this. For years, we've grown used to hearing about trade wars over steel, aluminum, rare earths, chips, and smartphones. Those disputes were dramatic. They sent markets swinging, and they reshaped entire industries. But imagine for a moment that the next battlefield isn't about semiconductors or electric cars, but something far older, far deeper, and far more symbolic. Imagine if the fight shifted to gold, the eternal symbol of wealth, the bedrock of financial systems, and the ultimate measure of trust in governments and currencies. It sounds like the plot of a financial thriller, but analysts warn it's not as far-fetched as it might seem. Because as tensions between the United States and China continue to escalate, the possibility of gold itself becoming a weapon in this struggle is no longer unthinkable. Right now, no official announcements have been made, no government press release has confirmed this scenario. But speculation is swirling in financial circles about what would happen if Beijing decided to push the trade war into uncharted territory. We already know China has used strategic resources as leverage before. Rare earth exports were cut back in retaliation against trade restrictions. Semiconductor partnerships have been frozen in the wake of US bans on high-end chip technology. And tariffs have already been imposed on broad categories of US goods, in some cases reaching more than 30%. What if the next target is the most universal safe haven of them all? What if gold is the next front line? Picture the scene. Chinese policymakers, already frustrated by Washington's aggressive tariff policies, announce a sweeping new set of measures. Suddenly, American gold, whether in the form of raw ore, refined bullion, or even finished jewelry, faces stiff tariffs in China. In the most extreme version of this scenario, there could even be an outright ban on gold imports from the United States. At first, it might seem like just another round in the tit-for-tat trade battle, another tariff among many. But if you think about what gold really represents, the implications become staggering, because gold is not just a commodity. It is not just another line item on a trade balance sheet. It is the very backbone of financial trust. For centuries, gold has been the metal that anchors value. Governments hoard it in their central bank vaults to give confidence to their currencies. Investors flee to it whenever they sense danger in markets or politics. It has always been the ultimate insurance policy against uncertainty. And for America, gold has always symbolized financial credibility. US gold production accounts for about 6% of the world's output. Huge mines in Nevada and Alaska produce hundreds of tons a year, supported by tens of thousands of workers. The jewelry industry in cities like New York and Los Angeles depends on the steady flow of domestic supply. And above all, the United States has long positioned itself as a guarantor of transparency and reliability in global gold trade. If that role were undermined, it wouldn't just be a problem for miners or jewelers. It would strike at the very perception of the dollar itself. Now take that thought further. Imagine China doesn't act alone. Analysts speculate that Beijing could attempt to build a coalition of partners, countries deeply involved in gold refining and trade such as Switzerland, the United Arab Emirates, or South Africa. These states already have advanced refining systems and large trading hubs. If they agreed to establish a parallel settlement and storage system outside of US influence, the result would be nothing less than a golden decoupling. A world where the traditional financial infrastructure built around the dollar and the US financial system is bypassed in favor of a new, yuan-centric alternative. That kind of move would echo the broader de-dollarization efforts we already see with BRICS countries exploring non-dollar settlements in oil, gas, and other commodities. Of course, this remains hypothetical. No one has confirmed such plans, but the pieces of the puzzle already exist. The Shanghai Gold Exchange is expanding its influence, and just recently, the share of yuan-denominated contracts in gold trade reached record highs, surpassing 40%. That number alone is a warning sign to Washington, because it shows that global players are already willing to price and settle gold in currencies other than the dollar. A parallel system doesn't have to be formally announced to begin operating. It can simply grow organically as more traders shift toward it. And if at some point China decided to put political weight behind that system, excluding the US would suddenly look less like fantasy and more like strategy. The consequences for America would be severe. Let's consider the mining industry first. Gold mining is grueling, resource-intensive work. Picture enormous open-pit mines where trucks the size of houses crawl up ramps carrying hundreds of tons of ore at a time. Entire communities live and work in remote regions for months on end, relying on mining to survive. After extraction, the ore goes through complex chemical refining processes where a ton of rock may yield only a few grams of pure gold. Every single ounce that makes its way into the global market represents the labor of thousands of workers and the investment of billions of dollars in infrastructure. Now imagine tariffs that cut off access to one of the world's largest consumer markets. Exports would collapse, companies would slash jobs, and small towns built around mines would face economic devastation. But the impact wouldn't stop at America's borders. If gold trade were weaponized, global prices would soar. Investors everywhere would scramble to reposition. In normal times, rising gold prices are a safe haven for Americans too. But if a Chinese-led system captured the upside while excluding U.S. companies, the paradox would emerge: gold values climb worldwide, yet U.S. miners and traders find themselves isolated from that growth. Analysts at major banks have suggested that in such a scenario, capital would flee U.S. equities and bonds, looking for safety elsewhere. Instead of the dollar being strengthened by gold's rally, it could be weakened, as global markets associate gold's rise with America's exclusion. And how would Washington respond? Predictably, with sharp words and threats of retaliation. The White House would brand any restrictions on America's role in gold as financial aggression. Donald Trump, back in the Oval Office, would take to Truth Social with vows to hit back harder than ever. But behind the bold declarations, the reality would be far less confident. Because trust in the dollar has always rested on two foundations: U.S. military and economic power on one side, and the symbolic security of gold on the other. If one of those pillars were pulled away, the edifice of dollar dominance could start to crack. Meanwhile, financial centers abroad would adapt. In London, already the world's leading hub for gold trading, dealers might increasingly turn to yuan contracts simply to hedge against uncertainty. In Dubai, whispers are growing about shifting part of trade settlement into digital currencies, not because they trust crypto completely, but because they want optionality beyond the dollar. In Asia, Bitcoin trading volumes often jump at the faintest rumor of new sanctions. If the gold market itself were hit, crypto demand could surge in ways we have never seen before. For global markets, the scenario looks like chaos: spiking prices, unstable currencies, and radical shifts in reserves. Think about the ripple effects. Central banks that have traditionally held the dollar as their primary reserve might feel pressured to rebalance toward yuan, digital assets, or gold itself. Investors who once regarded U.S. treasuries as the ultimate safe asset might begin to question their role. The very structure of global finance could tilt toward multipolarity. The Bretton Woods system that placed the dollar at the heart of global trade after World War II would suddenly look vulnerable, maybe even outdated. The political consequences in Washington would be no less explosive. In Congress, Democrats would accuse the administration of letting allies drift away. Republicans would demand immediate counter-sanctions or new tariffs. Allies in Europe would grow nervous, torn between loyalty to America and fear of being shut out of alternative systems. Latin America, Africa, and the Middle East would increasingly consider yuan settlements. In short, America would look less like the architect of the global economy and more like just another player struggling to defend its ground. And for Beijing, such a move would be about more than money. It would be about symbolism. Gold has always been the ultimate sign of trust. By pushing America to the sidelines in the gold market, China would be signaling that the age of unquestioned dollar dominance is fading. It would be cementing its role as the new anchor of a multipolar financial world. Now, once again, let's be clear. This has not happened. There is no official gold blockade, no tariffs announced, no coalition formally created. But the possibility is real enough that it's being discussed seriously in policy circles and financial think tanks. And in today's volatile climate, what sounds like speculation can become reality faster than we expect. Because we've already seen the pattern. Tariffs lead to counter-tariffs, export bans lead to retaliation, and each round escalates higher. Gold, with all its symbolic weight, could easily become the next lever pulled. And so the question remains, if gold ever became the next battlefield in the US-China rivalry, Would it mark the beginning of a financial Cold War that reshapes the entire global system? It hasn't happened yet, but the pieces are already moving on the board. This was a speculative scenario, a what-if look at how trade war tensions could evolve. But it carries a warning we cannot ignore, because history shows us that empires don't just fall from armies and wars. They fall when trust in their money is lost. And if the dollar ever loses that trust, the future of global finance will be rewritten before our eyes.